And welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from Westlake Village, California. Happy Tuesday. It is nice to be back to the grind, and really not a grind for me. I can honestly say I'm happy to be back at the battle station after a long weekend because I love what I do. I get up at 4 a.m. every day. I review the markets. I head to the gym, and then I get to preach the Bitcoin gospel all day, every day. It's a lot of fun helping people create generational wealth. And frankly, this morning I had an epiphany, and it's been brewing for some months, and I couldn't really put words to it. But the COVID lockdowns really made me start to think about our freedom. And here's what I concluded. The only way to be free is to be extremely rich. And the only way to be extremely rich is to own an asset that the government can't take away from you. And that's Bitcoin and a few other cryptos. And that's why it's imperative you begin the journey of understanding crypto and eventually trading crypto, in my opinion. So what do we cover on this channel? Bitcoin's price action, whether we are bullish or bearish in the short term or the long-term outlook. And we're going to cover some crypto news. So let's just start off with some news, actually. And to me, this was pretty mind-blowing. I want you to watch the first 35 seconds of this video here.
Fossil fuels provide 80% of the world's energy. They're growing fast, so there's clearly something special about them. By the way, we're in an energy crisis for lack of fossil fuels, and they're saying that we can rapidly replace fossil fuels, mostly with solar and wind, that are currently 3% of the world's energy. This is a total crackpot idea that this is all going to happen in 27 and a half years. What I consider this whole ESG argument of replaceability, it's not a real argument by people who understand or care about energy. It's a fake argument designed to reassure us that it's okay to get rid of fossil fuels and we won't suffer any consequences.
All right. Highly recommend you guys check this full interview out on, I'm going to leave a link in the description below. Pompliano, big crypto advocate, and just a great interview, a different perspective, because this plays into the $750 billion Inflation Reduction Act, which is just a fake argument designed to reassure all the Democrats that believe all the fake news, right, that they're fighting inflation by spending almost $1 trillion on green energy. It's the biggest hoax of the world. Just like this interview a year ago, Powell was on the TV telling us this about inflation, right? Inflation is transitory. Listen to this.
That inflation could actually be quite low going forward, but that's not really where our focus is right now. Our focus right now is we need to. Our expectation is that these high inflation readings that we're seeing now will start to abate, and that's what we think, and it'll be like
a year ago. The guy with all the financial resource in the world is telling us that he thinks that inflation that's starting is going to abate or go down. Flat out lying to the American people, and they put it all over the fake news media for everybody to gobble it up and, I guess, believe the old machine. And here's another one I wanted to play because this is part of my epiphany, guys. I'm telling you, there's something going on here. Janet Yellen, I don't know, when was this? July 24th? July 24th, she says, what, we're not in a recession? Even though we had 2 negative quarters of negative GDP, right? For the last 100 years, that's been the definition of a recession.
Pleasure to be with you.
Let me just start with this. Many businesses seem to be preparing for a recession. Should all Americans at home be preparing for for a recession that many people think now is likely?
Well, look, the economy is slowing down. Last year, it grew very rapidly at about 5.5%. And
the only thing that looks pretty slow here is Janet Yellen. She looks like she's slowing down, but just wait till she tells us.
And that succeeded in putting people back to work who had lost their jobs during the pandemic.
Who the government forced small businesses and family-owned businesses to shut down and be destroyed so big companies like Amazon and Walmart could just start making massive profits.
The labor market is now extremely strong. Even just
The only thing strong about the labor market is hourly wages and the fact that employers like me are having to pay people more and more money per hour, right, across the U.S. That's the only thing strong about the labor market. It plays into inflation.
during the last 3 months, net job gains averaged 375,000. This is not an economy that's in recession, but we're in a period of transition in which growth is slowing, and that's necessary.
We're not in a recession. We're just in a period of slow growth. According to Janet Yellen, who looks like should be Biden's grandmother or something. I don't understand how they put people this incompetent in charge of, she's the Secretary of the Treasury, for God's sakes. So it's more and more fake news like this that is coming out every day. I mean, the big one today also, I would play it, they raided Trump's house. The FBI raided Trump's house. Oh, Trump's a bad guy. We're raiding his house. So if you still, if you believe you should be wearing a face mask in public, or in your car, right? You probably believe that inflation is at 9%, right? So, I mean, the bottom line, the people flying the rainbow flags, stealing elections, and pushing the ESG agenda, they're either in bed with the government or they're getting subsidized by the government. And these people, they're willing to fight to defend what they're dependent upon, right? They're scared. They don't want to lose abortion rights, right? So what we do on this channel is we teach you to become financially independent, right? Teach you how to become your own bank. Teach you how to have generational wealth that passes down to, your grandchildren's grandchildren. So if you care to learn how to trade this highly esteemed piece of life savings technology called Bitcoin, well, I suggest you follow our channel and don't forget to set up TradingView for free. You can follow the link in the description below. It's free. And then you can begin to start to track these assets, get an idea of where the prices are going. Because it's 80 to 90% volatility. Yeah, you could just buy and hold and, hope for the best, but some people end up selling high they end up buying high and selling low, and that's what we try to avoid here. So I'm going to start out with Bitcoin on the daily price action yesterday. I believe I had it drawn out. Let's see what chart, the chart of the day. The chart of the day, where did she go? There it is. And I did say yesterday, we were looking for a closure above 24,750. That would be our breakout level. And I did say, hey, if you're a little more aggressive, you could wait for a candle body closure above that high. We did not get it yesterday, getting thrown right back in our faces. And that's why we wait for closures. And the day closes 5 p.m. Pacific. That would be when the daily candle closes. So something to be aware of there. And what did I say here on the bottom side? If we started to close below this wick or candle body closure below 22,500, very likely going to get us down to the bottom side of this channel, which I think everybody in cryptocurrency land is watching this channel right now because the prices are just moving slow as molasses. We've been caught in this, slow grind to the upside. Call this a bear market rally. And I'm going to start out with a long-term analysis, okay, with Bitcoin. And just kind of go over this again, and you can back test this. But when we begin to get in a weekly downtrend, right? A weekly downtrend, what is a downtrend? You got lower lows and lower highs. Typically in Bitcoin's history, that means you're going to have 3 to 6 months of down and longer. It could be up to 18 months of sideways and down market. So if we can effectively have a bias on where the price is going to be over the next 6-12 months, then we can prepare our portfolios in crypto for that type of price action. And I did say yesterday as well, something to be aware of is the monthly chart here. If we do tick above, 24.8, I would personally be waiting for a closure above on a monthly time frame. And these signals tend to take months to play out. So that gives us a general governor for if we are going to get an upside price action move. I would just be looking for another lower high. Again, the trend is your friend till the end of the trend. What is the trend? We're in a downtrend. When does the trend change? Well, we would need to make a higher high and a higher low. So what on the weekly time frame, this is for a macro outlook. So something like this and this, that would be a trend reversal on the weekly time frame, telling us, hey, we're going to get 3 to 6, maybe 18 months of upward action. On the other side, some would not confirm this as a local high, and we might even be waiting for a move all the way up to here, a higher high and then a higher low. Above this point, that'd be the more conservative outlook. So Bitcoin has a lot of work to do before the trend changes. So it's very, very important to understand that. One, when Bitcoin's in a downtrend, typically stays in a downtrend for a while. So people that are looking to enter into the market, they may want to look for a good entry point at a lower level. Some of the targets we have been discussing on our channel, and for some time now, we've been saying, hey, look, Bitcoin very likely does get a swipe up to this region, 26.5 to 28,000 on spot price. On CMEs, it would look a little bit more like this. To fill the gap here, gaps like to get filled. Another, basic TA fundamental in the futures market and in the stock market, gaps like to get filled. Again, this isn't financial advice. I'm not a financial advisor, but we remain with the bias that we're in a weekly downtrend. And so when we do put in a lower high, is this going to be the lower high? I personally don't, I don't know yet. I have to say I have a healthy amount of I don't know, because this market has been on the shorter term time frames like a daily and below. It's been actually, I would say on the daily in particular, it's been quite brutal, just flopping up to the upside and down to the downside, and just kind of throwing it in people's faces, getting everybody bullish right here. And again, what I would say on Bitcoin's price action today would be something like this. We have bearish divergence formulating, which we did talk about yesterday. If we, to like the fifth drive variety, I mean, we're talking about massive amounts going back from this point right here. That would be 1, 2, 3, 4. Okay, 4. If we do confirm this as a local high, how would we do that? Would be just a closure in aggressive traders, a closure below there. More conservative, a closure below here at 22,922. I'm expecting a big move coming. So, to the tune of, I would say 20% in either direction at a minimum, maybe up to 30%. And why is that? Well, when volatility gets low, this is called the BBWP. It's the Bollinger Band width percentile. It measures volatility. It actually measures the distance between the Bollinger Bands. And that's a whole nother conversation. But what I would say is that one thing we do know in cryptocurrency land is when there is a low period of volatility, what's likely to happen next? What's likely? an explosion because Bitcoin is a volatile asset. Even though it's life savings technology and it's way better than US dollars and it's way better than putting money at the bank right now where you're getting robbed blind by all the bankers and the politicians that are in bed together, right? Bitcoin is going to have an explosive move based off of this read. Let's see what the 2-day, low volatility on the 2-day. How's the 5-day? Oh, the 5-day. Yeah. So this is getting ready to melt up. The higher the time frame, the bigger the move, right? So what would I match this up with? So on the 5-day, which we just got a 5-day closure yesterday, getting a bit of a backfill. That's okay. I do think there still is a threat of an upwards move somewhere around this last wick right here. That wick right there. So what is the market likely to do? It's just likely it's trying to screw everybody. That's what the market, these markets are rigged for you who are not familiar with cryptocurrency. Just so you know, they're rigged to take your money. So how do you learn to not get your money taken? You have to learn technical analysis. It's really, it's not very simple. In fact, it takes thousands of hours of study, and I recommend that everybody put those thousands of hours in and just start with maybe 1 hour, right? We do have a few basic trading tutorial videos on our channel, but you can simply start with setting up TradingView just like this for free. You can get the exponential moving averages, you can get the RSI, the Stokes, and the volatility indicator all in one shot for free. And then I think the premium service is like, I don't know, $15 a month if you care to add more indicators. But so bullish or bearish in the long term, when I'm talking 3 to 6 months, I'm just going to give it away here. I do think that based on this guy right here, again, on the 6-month chart, we've been going over this on the S&P 500. We had a signal that just closed July 1st. It was called, this is called a bearish engulfing candle. I'm looking for a minimum move back down on the S&P down to 20, call it 2,300, which would shave off of today's price 40% down. 40% down. And again, I'm not financial advice. I'm not a financial advisor. I'm just going to point out why we think that's going to happen. This signal has only gone off 2 times in history. Once was in 1973, which we went into a 7-year bear market. Didn't eclipse those highs for 7 years. And what do you know? And by the way, this is what the S&P looks like on going back to 1872. 1872, okay, 1929, this bearish engulfing candle right here. That preceded the Great Depression. And anyways, along this epiphany this morning, you know, I don't know, you know, a digital dollar, cryptocurrency, is it the best thing for the world? I don't know. But all I do know is if you learn this stuff, you're going to be able to make generational wealth because it is the future. It's going to be part of the future, whether we like it or not. So it's like, you know, you got to be able to use the enemy's devices against themselves. No weapon formed against thee shall be prospered. And right now, Bitcoin and crypto does give you a form of freedom that nothing else offers, and that's to become your own bank. Why should you have to get permission from your bank to send your money where you want to send it? Why should the government have permission to shut off your finances at any moment because you didn't follow their rules, you didn't wear a mask, you didn't get the vaccine? It's absolutely crazy, and I'm so glad to be preaching the Bitcoin gospel. We do have a free investor guide below. If you do want to put crypto in your IRA or 401k, you can do that. and just diversify if it makes sense for you. Again, not financial advice, not a financial advisor, but something you may want to consider if you want to build some generational wealth. Last piece, I guess I'll follow up. So Bitcoin's price action, we're looking at the S&P. And why am I, bearishly biased is because Bitcoin right now does whatever the stock market does. So if stocks go up, Bitcoin goes up more. Stocks go down, Bitcoin goes down. And here's a perfect example today on the daily time frame. We got this little bear candle pulling back. If we close below here, that's a bearish engulfing candle, and I would expect another day with at least some follow through, especially if this volume ticks up here. But example, whatever stocks do, Bitcoin does more. And this doesn't happen every single day. It's not an exact formula, right? But in general, NASDAQ's down 1%, Bitcoin's down 3%. NASDAQ's down 1%, Bitcoin's down 3%. If you overlay the charts, it's almost a one-to-one correlation on when stocks come down, Bitcoin comes down. There is no decoupling yet. The decoupling won't happen until the trend changes, right? Let the trend be your friend till the end of the trend. And I'm just going to wrap it up on the lower term time frame to see if I see anything with Bitcoin's price. And yeah, call that the last line in the sand. Could we pick ourselves up here? This 4-hour closure will close. This is volume, right? A little bit of volume coming in here on at 16,350. Excuse me. The volume on this candle is relatively solid. We got more volume on this candle, which this could be a hammer, which is a reversal candle. So if Bitcoin does close above the green 55 back on the 4-hour, I imagine Stokes may flip back up at 23. They need to get back about 24,000 for the momentum indicator, the stochastics, which tells us the momentum in the market. As you can see, these crossed down, price went down. Volatility is declining. So, and we're just beginning to test the bearish control zone again on the RSI, which is the relative strength index. And do I see any divergences here? No. So clear stop and reverse points. 1, 2, 3. Coming back from this point right here. No, we are making all higher lows along here. And what do we have on the other side coming back from this point right here is 1, 2, 3, 4, multiple drives of bearish divergence where price is making higher highs, RSI is making lower highs. And that is that move playing out, which typically gets you to the bottom side of the range. So 22,500, I am expecting that probably to get tagged. If that breaks, let's just do a little Fibonacci retracement here from the low to the high on a bearish retracement. So again, bull traps, trap bulls, bear traps, trap bears. So where would that bear trap come in at? 22,200, which has been a consistent number throughout this price history. At least over the last few weeks, we've been looking at that as a pivot on the market. And back below 22,200, I would be looking for a test of this bottom side of this trend line. And do I think we have enough to break it right now? It depends on what stock market does. And we did talk about this on the channel as well. Coming out here and testing this purple 200 off this measure move. And where is the next point of failure for this little pump out fake rally? Yeah, below the green 55. If we start to lose 12,500 again, I would expect we probably come back and test this guy at 11,300 at some point. And then if we start closing dailies below there, next target down at 10,000. So big news tomorrow. We got the CPI print coming out. It's supposed to be, so the inflation report is supposed to be better than expected, right? Right ahead of the Inflation Reduction Act. I wouldn't be surprised if the fake news, the fake Jerome Powells, the fake Janet Yellens somehow fudge the numbers like we're supposed to believe them, right? The next time the CDC mentions something, like, I get scared, right? It's like, how are you supposed to believe one word out of their mouth? It's just garbage. So hopefully this resonates with you. If it does, smash the like button, pass this on to your friends or family, and let's get on our way to some financial freedom. Take care and have a blessed day.